This is our Forex blog for August 28th, 2012. We released a new version yesterday, and this Forex blog video will show the new tools in action. First new tool, which is really an update to an older one, the Build Your Own Trend, Histogram, and colored bars now have different options. There's less options in here. However, this was designed to work on range charts, and it uses range-based data. You can see here 30% weight. I'm using that on a 5 pips per bar chart, comparing, in this case, the yen up here to every other currency and so forth. Range charts are much cleaner, less noisy, and there's only a new bar when there's, when they move 5 pips. So by using range-based charts, you really get fast identification of new trends, especially after news events come up. The FX Power Index, 25% weight. This also uses the time frame of the chart, which in this case is a 5 pips per bar, and I'm using our digital signal processing based moving average shifted 2 bars to the right. It's very fast at identifying new trends, and so you can see 55% of the weight of this new tool are based on range-based tools that show momentum and intensity. And so you can see, we bring up the quote sheet, hot list, sort it, and you can find the strongest and weakest ones. This is the first step of our easy 3-step Forex trading system, which has been made a lot easier as of yesterday's release of version 4.290. So the first step of our easy 3-step Forex trading system is simply buy the strongest currencies versus the weak, sell the weakest ones versus the strong. You can see the New Zealand is extremely weak, the dollar's extremely weak all day. So we're looking to sell the dollar Swiss, we're looking to buy the euro dollar, and to a little bit less extent for some part of the day buy the pound dollar, and the CAD is also very strong, so we want to sell the dollar CAD. Those are the ones that you want to focus on. And you can also trade the New Zealand against the euro and so forth. These are not currencies that we typically leave running. You can take a look at the Euro New Zealand just very quickly on a chart and see that this thing's been trending up explosively all day. One of the new tools, which I'll also put on this chart now, is it lets you look at the intraday value areas. The default is 4 hours. I really absolutely love the 60-minute one. And what this does, it has to go get tick data. It's going to show you where all the, the majority of traders have positions for the previous hour. So above it, you're looking for buys, and below it, you're looking for sells. So you can see this one started the day off going sideways. It looks like it was in a downtrend, so you might have sold here, made a little bit of money, sold here, made a little bit of money. It broke out from below to above the point of control and exploded up. And you can basically, once you find a trend like this, you can focus on, this buy right here. It went down and spent most of its time near the lows, and that's why the point of control during the next hour is right near the lows. Broke out above, you go long, you can see it shot up from 55.30 to 55.90. Absolutely huge move. Another one that was very strong today was the Swiss, because the Swiss and the euro are pegged together, so you could sell the New Zealand Swiss. You can see this just went down, down, down all day long, and as the hourly point of control is being calculated, you'll soon see that every time it goes from above to below it, you sell. Goes above it, you buy. You can see it went up, went below it, went down, found resistance right there, went down. False, if you went long right here, you had a chance to make a little bit of money. You sell it, it went down. Obviously, the farther down it goes, the less likely it is to continue. Once a currency moves 80 to 100% of its normal range for the day, you really got to expect the trend to end soon. All right, let's take a look at the euro dollar. This is showing our new Build Your Own Trend tool, which is vastly superior to the old one, and you can see it started showing incredible intensity right here on this bar right here, right at the beginning of the explosive trend. You see this? This is how radically improved our new version is compared to the last one. I've spent a lot of time over the last month trading and working on our tools to give more weight to intensity-based indicators versus directional-based indicators. In the previous maybe 3 years, we focused on tools that show direction and intensity, and I've kind of weighted them, 50 to 60% directional, 40% intensity. Now with the new tools, I'm giving 50 to 70% weight for intensity and far smaller weight for directional tools. And the directional tools I am using, here's an example of one just on this chart here, is a moving average using our new digital signal processing technology, 5-period moving average shifted 2 bars to the right. And what you can see is it's very quick at identifying new trends. See, very quick. And I'm doing that with all the euro-dollar pairs, all the dollar pairs. That's one of the tools that's in here. It's also one way that you can trade with. It's a really good entry tool and exit tool. In, out, the trend's up, obviously, you're buy again, you're out, picking up all kinds of moves. Now, the farther the currency moves up, the more likely you're going to want a little bit deeper pullback. So you bought it here, you might have bought it here with a loss, bought it here, you made 20 pips, you wait for a little bit of a pullback, you buy it here, didn't make that much, bought it here, didn't make that much. The trend might be over. And anytime you can see it go up with incredible momentum like this, with pullbacks of significantly less intensity, that trend's very likely to continue. Now, another tool that we have enhanced and improved, and I'm leaning towards using this myself instead of the histogram on the bottom, which does have its benefits because you can visually see, the pullbacks not having nearly as much strength as before. But with the currency meter showing you that same information, you may not need it on each chart. Here's an example of our FX build your own trend candle colored bars. And the benefits of this is without that histogram on the bottom, you have significantly bigger charts to look at and work with. You can see the darker the green, the more likely it is to go up. You see a big trend up like this, you wait for a little bit of a pullback, the bars go green, you buy it, you make 8 to 10 pips here. Notice that there's not a whole lot of weakness on the pullback because the bars are very light shade of red. They go light green here, which means they're slightly strong. They break out, you go long, you make another 10 or 12 pips. And this is the first bar that goes from dark green to light green. You might at that point start trailing your stop underneath the bar's lows and you get out. Notice this pullback here, a little bit of dark red. Right here it's not dark. You bought right here, it goes up 5-6 pips, you move your stop to break even, you get stopped out, maybe you make 8 or 9, 10 pips on the second trade. I think this makes trading very easy. Also note that the Swiss, very strong today, lots of intensity, very little weakness on the pullback, especially this time right here. That trade, when you have all the time frames, 15-minute trend, hourly trend, daily, weekly, monthly, all up, there's no red at all. Amazing trade right here coming up to 9 o'clock. Selling the weak dollar versus a strong Swiss makes sense. Remember our daily and weekly FX value areas. This yellow area right here is the average price traded yesterday. It's a price most traded yesterday, actually. This is last week's average price, and so when it's underneath the previous week's average price, you want to tend to go short, and especially when it's underneath the previous days, you're looking for sells. Here's the same chart with the candle colors instead of the histogram. And I also have the hourly point of controls on here. And so this one starts off above the previous day's most traded price, underneath the previous week's. You really could go either way. It's just kind of chopping around. You're waiting for a breakout above these bars high to go long or below the low to go short. The bars are red right here, and they pretty much stay red all the way to the bottom. The market has a decent pullback, but remember the dollar Swiss doesn't move nearly as many pips as the euro dollar and pound dollar, so 8 to 15 pip pullback is okay on this one. This one pulls back about 20 pips. The bars go light green. You might have shorted here at 76, comes down here and really can't go any lower. You get out with a small 5-6 pip profit. You always want to be careful selling near the lows, and so I probably would not have sold that bar. Tried to go up again, came back down. It's not, obviously it doesn't appear to be going up. You go short again here at 70, goes all the way down to 51. Obviously you could catch 12 to 20 of these pips, And once it's near the lower bands, I kind of give up near the lows. Wait for the weakness to kind of settle, wait for it to go sideways for a couple hours, and if it breaks out over the high, you can typically, look for buys. The CAD also very strong today. Remember, the dollar was one of the weakest, so we are looking to sell the dollar CAD. Hit the plus key here. This is the point of control of the previous day. The price most traded yesterday. The price traded most traded last week. So it's underneath both of them. It's very likely to trend down, especially when it breaks last week's value area low, and it's just off to the races. This is really when it's confirmed in a downtrend. Notice extreme weakness right here as it's going sideways. There's no strength. 15-minute trends down, hourly trend, daily, weekly, monthly. You get short right here. You can use our trailing stop to get out, or once it's already made some kind of a move, the second wave, I typically get out of the whole trade near the fib target. So I would have probably been out of here at 54, short at 71 for 15 pip profit. Now let's take a look at the dollar CAD. I may or may not have this particular currency up with the colored bars. Here it is with the colored bars, and I don't have the daily and weekly point of controls on here. You can see the hourly moving average. When it's underneath there, it's likely to go down. Try to go back above it. The bars are very light shade of green. Breaks down right here, you go short. Pull back right here. I would like this up bar not to have so much green, but the next bar is pretty dark red. When it goes underneath that low right here at 88, you're short. And you really probably would have stayed in that trade here near the lows because there's really not a whole lot of strength, as you can see. Usually when you have dark red bars go to light red, go to green. If it goes above the highs, you're going to get stopped out. You move your stop here, draw your fibs off this wave, and again, you're looking to get out of that trade right near the fib target down here in 54. In that case, you would have been short here around 88, and you made 34 pips minus your spread. Let's put on the hourly intraday value areas. And again, what this is showing you is where the market spent most of its time during the previous hour. The green and red showcase 68% of the trading activity for the previous hour. The yellow is the point of control. And if you want to make, if you only want to see the point of control and not have the upper lower value areas, you can put the width on here as 0. Notice right now we see the green and red for each bar. I don't particularly care what those are on an hourly basis. On a 4-hour basis, I like to see them. So again, you can just simply make them 0 and they will not show up on your chart. See, now you just have the point of control. And above this, you're looking to buy. Below it, you're looking to sell. If all you do is, when you see it underneath here, you go long, went up a little bit, breaks down underneath here, you go short. Now sometimes price opens and the first bar, if it's kind of above or below the point of control, obviously this isn't a downtrend now, you would prefer to sell it. So you're looking to sell it here, this next hour right here, here. Notice how it acts as resistance. And this is one of those instances where it opens up during the next hour. The point of control is already down here. It happened to just open above it. That doesn't really count as a cross, but it did go up another 12, 15 pips after that. I prefer to see it open above a point of control in a downtrend, and you look to sell it here, here. There's so many good trades on this because you know that if you do sell it right here at 72, normally you want your stop to be above the high here. But with these point of controls, you can have a much tinier risk than you've ever in your entire life had before. Put your stop 1 or 2 pips above the point of control, and you're literally risking 5 pips on a trade that might give you 20 or 30 pips. And that's the only secret to trading, small losses and big wins. And now you can have much smaller losses than you've ever had before, and you're very quick to get out. I'd much rather traders take a trade, lose 5 pips, get in it again. Even if the trade didn't work, lose 6 pips. You're only down 11 pips. You get a 20 pip win, you're up 9 pips on the day. And obviously that's not going to happen every time. You might have a trade that gives you 15 pips and then another 20 and you have a 35 pip day. But always plan and trade for the worst possible scenario. And that is, a losing day. Try to lose the least amount of pips possible. And with these range bars, you certainly can do that now. Last but not least, one of the new additions to our software is a range hot list or quote sheet indicator, and it shows you which currencies are above or below the previous days and previous weeks value area. So you go to add columns. It's underneath inactive scripts down here. Value area day and week. And this gives you a wealth of information, and you can sort by it. And it lets you see how many pips above or below the previous day's point of control, the yellow line on the intraday charts, or the previous weeks, which I have colored bright orange. And this shows you if the currency is above the point of control but not above the upper value area, it shows light green. If it's above the point of control and the upper value area, it shows dark green. So this currency right here is underneath the point of control but not underneath yesterday's value area low. All the rest of them are. And so basically, if you see the Eurodollar, it's above yesterday's value area, above the previous week's value area, those are ones that you can be focusing on buys. Now, the CAD yen, which I didn't show today in class, is above yesterday's value area and previous week's value area. And if you saw, it go from underneath to above the hourly, you can see here is the previous week's value area, previous day's value area. Put the intraday value areas on here. You can just simply have a trading system. It's really this easy, that if it's above the previous days and previous week's value area, when it goes above the previous hour's value area, which is, again, where most traders have positions during the previous hour, you look to buy. So let's add those to the chart. Has to go and do a lot of tick calculations to come up with what these are. And so you can see it broke out. It was above the previous hour's value area. You made money. You probably broke even. You would have maybe went long here at 54. It went all the way up to 82. Very beautiful trade. It came up here and went sideways, broke out, went long here at 69. It obviously is right near the upper containment band, so it's probably run out of steam. You probably might not want to take that, but if you did, when you see it go up with a lot of intensity and then the intensity falls off a cliff right here, you might decide to get out of the trade somewhere at 73. You're in the, so you probably broke even on that trade. But usually when these value areas get broken, there's, 8 to 15 pip move because traders who are long up here for the previous hour at 79.68. And sometimes during this next hour, you can see the previous hour, most of the activity happened right up here near the highs. Anytime you see that and the market comes back up to that level later and doesn't have a whole lot of momentum, it almost always fails at the double, or in this case, triple top. So those are some of the new ways to trade. This is one of the best releases we've ever had, and we're not done trying to improve the software, but this is a radical improvement. I've already had comments on our Facebook page from traders that did well trading today with this tool. So please join us on our Leverage Effects Facebook page, and so you can see all the new stuff that's in the works that I put pictures up on a couple times a week, and enjoy the new tools.